Okay, let's do this video. So I asked for a range of questions, which were great. There's some really good questions in there. We'll cover those a little bit later in this video. For now, we'll stick with a market overview and dive into kind of where we are. Obviously, a weekend where alts have suffered pretty substantially. BTC has suffered a little. It's not too bad, right? The actual reaction on BTC isn't as horrendous. A lot of alts obviously have shed a huge amount of value. Have seen some of the bigger kind of clawbacks over the past 24 hours. But the market is still in a pretty terrible place as a whole, and when we consider all the factors that are currently influencing the markets in terms of outside news, the environment, it just doesn't make it a very attractive investment space at the moment. If you're looking at trading this as well, it also makes it far more difficult because you have perfectly good setups that one tweet, one update, one more piece of news, and suddenly everything is wiped out again. So it's a very temperamental environment even to trade in. So even based on a systematic and pure signals based approach, it's very difficult to kind of action that based on what we're seeing happening in the market at the current time. So really it's kind of, I think just if you want to be involved in the market, just be aware of what you're currently involved with and be very aware of what the situation is currently, because otherwise you're just gonna get frustrated and chop yourself to pieces, I think, in this environment. But the slightly more positive news is on the weekly for BTC. So we're still trading above the level here at 24.4. This is the big one. This is the one that still needs to continue to hold. So regardless of if we trade lower, it's very important that weeklies stay above this level. This has always been the breakout point of that consolidation range down below. And if we don't want this to end up with a fake out to the top side and therefore expecting probably far lower prices, then this is the level that needs to hold. Weekly RSI coming back down to the 50 level. Overall, a pretty good scenario for BTC to be in. It's weathering the bad news pretty decently, and actually when you look at this chart on the higher time frames, I think it's fine. I think you could be forgiven for not even being aware of that news and looking at this weekly chart and saying, well, actually, the situation here looks pretty good. Obviously, it's far different when you look at the alt space. Whether or not that's something that we can take a huge amount of strength from in terms of positioning on BTC, we're yet to see. But as far as I'm concerned, this is still fine. Below 24s, you've got a real problem, I think, with BTC through this region. I think that is setting up for far lower, and I think that's probably then setting up for what's going to be a kind of a far longer term range that we're going to find ourselves in when we're looking at this level here, and then we're looking down at the lows for this. We're just going to end up with this mirror scenario from top to bottom, where we get the fake out of the top, like we had the fake below the bottom, and then we're probably going to end up inside this range. I'm sure we'll probably end up tapping back here at some point, whether or not that's a wick or not. But I think this scenario is what it will do. It will play out back inside here, and that's probably the rest of the year done. If it gets back inside here, that's it. While we're above here, like I said, I think you can still make a pretty decent argument for this continuing to the upside. As crazy as it sounds, in the current environment, that's still the invalidation on the higher time frames. That's where we can't trade below, and as long as we're above that, and this weekly is kind of coming down the way it is, that's okay. Downside of that, like I said at the start, is that any piece of news is just going to shatter that. Anything that is going to ramp up the scenario more. We already know how under the microscope, crypto is from a US perspective, and anything that continues to hammer that is just going to send this below that level. For now, higher time frames, it's the only chart in crypto I can basically make a decent argument for a higher time frame, decent looking chart. And then you've got like absolute horror charts out here like Atom. And the reason these are horror charts is that you've got consolidation for basically 12 months, and now you've got breakdowns of those consolidations. So now we've got weeklies making fresh lows, we've got breakouts of consolidation patterns, and these are the alts and the markets that basically I refer to it as like the irrelevancy cycle. So they just look as though they're the alts that aren't going to be attractive to bid, certainly not anywhere near these price levels, and we're probably going to see much lower. And again, if we just kind of consider the basics, this is a 12-month consolidation with a breakdown. So therefore, this is week one of any potential downside expansion, this kind of isn't the end. So I expect that markets like this will probably have a very poor continuing rest of the year. And there's a number of them. Atom is one that's a good example. Another one is ENS, breaking down out of this structure down here. And again, just these converging trend lines just to indicate, where we've seen the rejections and the support previously. And, ENS just falling off the face of the earth down here. And then you've got the ones that have just got the horizontal levels, and you've got stuff like Link. It's got its big horizontal support under here, and it looks as though the weekly is going to close below that. So again, you've got a horizontal range in here that we've been chopping around in for the best part of 12 months, a little bit over, and this is the first week of a breakdown. So, with Link, we can even expect something, like this, maybe continuation, then the retest up here, and then that being the sell-off point then. So this is the time to be building the shorts, is once we actually see that relief and that movement away. And fingers crossed, if you are looking at shorting, that all of the work hasn't been done in this 12-month range, and they can just let this bleed out now down to whatever price point it's going to stop at. Now, the nice thing about the horizontal levels on a lot of these markets as well is, very similar to the way that BTC reacted down at the 16,000s. This is a nice opportunity to move back into the market when we see some strength. So if instead we see these markets trade below for a few weeks and then rally and close back above, then we've got a reason to be interested and move back into the markets. But that's what we're waiting for. It has to show some signs of bullishness. It has to show some signs that it doesn't just want to completely die from this point and that's it. And then the other one, obviously, is Sushi. They're the ones that I covered off earlier in the tweet that I sent, just to kind of show the bleak scenario. And Sushi is the same through this region here. A huge weekly range, breakdown here on the 3-day, and then just continuation now. Very sad looking chart, and a market that it's been the kind of the poorer performers from the kind of the mini run in 2023 we've had, where even though the gains weren't too bad on Sushi's side, I think it was like 70% or something to the upside. They underperformed, a lot of the flavor of the month coins that we had during that period of time, OP, APT, etc. And they're struggling the most on the downside, which again would be the expectation. Where is the demand? Where are the buyers? Who's going to buy Sushi at this point in time? It's one of those horror ones. And even markets like Sol, like that chart gives me a lot of concerns as well. The weekly RSI being in this position here is a really nasty setup to be in. This is just rejection at the 50. And again, you guys, even if you're just joining me more recently, will be more aware of my discussions around that. But this rejection at the weekly 50 level, and now the strong impulse candle to the downside, not a particularly pleasing situation, especially when you've got the resistance failure up here at 26. You've now got the loss of the support at 1970, which again would be a fair rally point, a little bit like we were talking about the Link retest at the bottom of the range. I think the 1970s, if we start getting up there, especially in a few weeks' time, then that's probably the opportunity to take a chance at the shorts. And if it reclaims that level, then great, you've potentially got an upside position, something that you want to buy again. So some relatively simple higher time frame levels, but a horrible looking market as a just a whole here. And I think that's about it. Equity is still looking far better. We've got an important week ahead, obviously, as well. So we've got CPI Tuesday, FOMC Wednesday, and we've got another event later in the week. Can't remember what we've got coming later in the week. Whatever it is. So we've got an important week as well. So we know the volatility is going to be up there. And again, like I pointed out in the video the other day, the concern is like what happens if there's the correction on the indexes and stocks see a significant correction. Let's say they hike on Wednesday. Let's say CPI comes in hot on Tuesday, and we start to see the correction on those markets. Then what happens to crypto when you get that additional pressure of the other markets selling off? And we know that the correlation has been off. We know that we aren't correlated, to anywhere near the same extent. However, I'm sure we will pick up that correlation again back to the downside should those markets start to sell off. So a really awkward marketplace as a whole. Awkward for traders, not looking great for investors. I don't know what you're looking for and what your asset selection is if you're looking at these markets and thinking about them as opportunity. The vast majority of this list, I say this regularly, the vast majority of this watch list, when it rolls around to a crypto bull market cycle again in the future, 90% of this watch list is going to be irrelevant in comparison to the fresh alts that are out and what everybody is interested in trading. So everything here, irrelevancy cycle begins, starts to bleed out, exit pumps, and that's about it. All right, let's do some of the questions. There were some really nice questions that were in the replies. So here's one, and this is Sharky. It says, what were the major challenges you had to overcome in your trading journey, both psychological and in your trading system / approach? So I think the major challenges, and this probably plays into kind of like current or past performance, certainly maybe 6 weeks ago. I think one thing is the discretionary trades and the systematic trades. So there's a big struggle between creating a trade for yourself versus trading what a system tells you. And that's kind of two parts. The first part of that is, the creation of those setups and those trades that you like the look of. So, you see something, you start to spin a picture about what's going to happen. You start to kind of, you're basically seeking your own confluence. So you start diving through time frames. You're saying, yeah, actually, it looks as though it could do this. It looks as though this is support. It looks as though it's going to bounce here. You're right. You start doing that process, which is kind of the, obviously the discretionary aspect of it. And that's something that at the start is quite hard to kick, especially if you're on social media and you have influence outside, because it only takes one nudge to look at a chart or one person to tweet about something, and suddenly you can, basically pill yourself that this is a great idea. And then your mind and your approach seeks out the confluence and the reasons why you should be doing that as well, versus the counterpoints to it. We always kind of look for confirmation in our thought process, and whether or not that's because it comes from a point of elevated belief in the person who tweeted about it, or whether or not it's just because we're desperate for opportunity. But we tend to kind of naturally seek out those trades and those confluence points. So getting rid of that was an important start for me. And that's something that I came at things from a systematic perspective. I was kind of systematic from the start. And therefore that kind of like crept in that I had to push back. And there were times that absolutely I was taking discretionary trades still, because, I'm human and that's part of the process. The other side is the systematic element to it, which is also taking the systematic trades, because sometimes when you look at something or something is happening in terms of the price action, especially when we've got a lot of volatility, when a signal is printed, sometimes you don't want to take it. It's hard to push the button. Because you don't want to actually take that position because the market looks scary, the sell-off looks scary, the pump looks scary, whatever it might be. And so you have a nervousness around actually taking the position to begin with. So I think it's, eliminating discretionary trades were a major kind of hurdle that I had to overcome. And that's, both psychological and in regards to the trading system. And then it's also kind of, the utmost belief in the trading system. And if the trading system starts to perform poorly, then understanding why that is the case. Are the market conditions different? Is the system not working, right? What are the reasons why, a systematic approach might not be working at a point in time like now as well? So, there's a couple of things I think in there in terms of major challenges to overcome. Let's go to a lower time frame BTC chart, and we'll paste the questions on there versus looking at a Sol weekly. It's less engaging. Yeah, how about a Diablo 4 stream? Yeah, that would be nice. Yeah, okay, so this one here is nice. There's two. Okay, it's a double parter. Which is more important, and this is Boo. Which is more important, market structure or support and resistance? The example of this is on BTC on the 9th of March. It made a bearish market structure, but it landed on support. How do you approach this? So we'll take that question first, and then we'll go over to the stops to break even discussion. So I know the point you're talking about. It's this sell off here. I don't even need to check the dates. I know it's this that you're referring to. So the most important thing from my perspective is still structure, because I think it still leads the overall thought process on kind of strength and market direction. I think this example here isn't a good example of market structure. And the reason that's the case is that BTC, when it trades down here, it does a couple of very important things. So we can see we just map out kind of the high and the low through here. So what we've got is we've got our low, got our high here, we've got our fresh higher high. So we've got this nice uptrending structure on the daily. And then what happens is we come down here and we make a fresh low. So this is a lower low in terms of the market structure. Now that in itself is not bearish. Right? It's not a change of market structure. In order to have a change of market structure in confirmation, you need a lower high as well. So that's the only way that a downtrend or a change of trend is formed, is by having both of those criteria present. So you need the lower low, but then you need the lower high. And BTC simply didn't print a lower high. There was the opportunity to print a lower high in this nasty little region of a couple of days here, and then we blasted through. So in terms of market structure, we don't actually have a change in market structure here. Therefore, this support level down here, if you're looking at this as support, maybe on a different time frame, but we don't have that kind of break of the market structure. So if there was a lower high here, then yeah, that would have been fine, and then we would be expecting the continuation of the downtrend from here. We didn't get that, and we've continued back to the upside. But now what you've got as a follow-up example is you've got this area now on BTC where you've got your low here, you've got your high here, and then you get the confirmation of the downtrending structure. You've got your high, you've got your low, you've got your lower high, and you got your fresh lower low. So now this is officially a downtrending structure through here, which is different to this region here. Market structure is very important, but market structure is something that you should be able to kind of very simply identify. Your whole trading approach shouldn't be based on market structure, but the market structure should give you some idea about where potentially the most powerful trades are going to be, or where on a higher time frame perspective you might be looking to position. So if you're looking for, the long setups, but it's a downtrending market, you're probably going to have a relatively poor time, or it might change your expectations. If you know, like during this area that we're in on BTC now, that BTC is downtrending on the daily time frame, you may look at taking long positions, but you may be more aggressive in taking profit. You may be looking to peel off positions quicker. You may be looking to reduce risk because you're going against the trend. So it may influence what your trading decisions are, but it shouldn't kind of be the be all and end all. So I guess in that regard, I kind of talked myself into, just re-recognizing the importance of your horizontal levels, like your support and resistance, still obviously being incredibly important in that decision making. And then the second part of the question is, do you move stops to break even? And if so, when? So I don't, let's bring this right over here. Where is this thing? Man, moved it way too far away, huh? All right, let's do this. This is a nice activity, huh? All right, done. So the stops to break even, I kind of have a problem with as a general approach. People are way too ready to move their stops to break even. Now, in the current environment, you maybe get some additional protection by doing that. In very hard trending scenarios, you usually get punished by doing that. You get tagged on stops, and then market continues in the intended trade direction. I find that stops to break even for the majority of people is an excuse not to take profit. That's the very simple way I like to phrase it. I feel as though a lot of people justify not taking profit by moving stops to break even. The reason that I say that is typically when you want to move a stop to break even, it's because price has done something significant. That could be it's rallied a lot, it's just hit a resistance level. On the downside, it's sold off a lot, it's just hit a support level. And instead of wanting to take profit because our mind starts spiraling into more, what more can I get from the position? What if this support breaks? What if this resistance breaks? Like, I want more. And a way of justifying that is moving stops to break even, because like mentally it basically says, okay, you've made a good trade off here. At least I won't lose money on this trade, but now I'm going to leave the trade open. So a lot of the times moving stops to break even is actually a signal to yourself that you should actually be taking profit on a position and not just moving stops to break even. That's the easiest way I can phrase it. If you are moving stops to break even, it doesn't necessarily just have to be break even. Your stop should move. And again, there's a slightly longer way of thinking about this. Your stop should move if your invalidation for the setup has now changed. So let's say, for example, you have longed off a low. We'll tie it into your first point. You've longed off a higher low on BTC. You managed to catch a really nice entry. Prices run up higher. And now what you decide to do is you decide to move your stop loss up, because price should not be making a fresh low against your position in order for your trade to still be correct and heading in the right direction. If you're in a long position, you've got an uptrending market, the signs the market is turning around and making fresh lows, that's a warning sign and invalidation for your position, so you'll move out the way. So it should always be on invalidation. Now, the slightly longer way to think about this is kind of like the rolling RR perspective, which is if you look at a setup and you decide that actually there's a fresh setup that you would take under the current conditions. So let's say, for example, this isn't like a legit thing, but let's say it is just for the purposes of the example. Let's say you're in a long position here, right? And you want to trade it up here and you've got your stop loss under here. And then let's say price does all of this lovely stuff where it moves higher. Okay. And then let's say, according to your system, there's a trade that you could take here. And it has a stop loss here. And you want to trade it to, again, where your initial target is. Now, if you've got a fresh setup in here that you could take independently if you weren't in this position, then this essentially can become your stop loss for this original position. Because if this is a fresh criteria in here for your trade, then you can basically shift your stop up and use this now as your trade position. You can also then get more advanced and start maybe adding some size in because you've got this fresh setup, increase your average up here, stop loss here, right? So you can start playing around with that. But generally speaking, I hate stops to break even. I think it's a shit way of justifying keeping a position open when really you should be closing a position. Okay, next one. Trade management. This is from that one thinker. One second, let me drink here. Okay, so this is how do you manage a short when you have a good entry to avoid round tripping? I think it's probably just direction of the trade. Of the trend. So if you're short in a downtrending market, then it's far easier to hold that position through. And again, it's thinking about invalidation. It's not getting too greedy, and it's thinking about where invalidation lies, and if that is now at a lower point in terms of locking in profit, and then not getting greedy. My BNB short position, I'm 50% out of this position now. But essentially, it's not getting greedy with this. And I've already got a huge amount of downside captured. It's not getting greedy. It's appreciating the fact the market is down 35% and I should start taking profit on this position. It represents a very big win and that you need to cycle out. So psychologically, we start to snowball into, well, everything's going to zero anyway, so the profit's going to be huge. I just keep this open. It's on easy street now, right? I don't need to touch anything. I got a great entry. And we know that crypto will fuck you real quick. in that scenario. Even though the market looks like ass, we know how quickly crypto can rally. So swing shorting is a very tricky skill when it comes to the crypto markets, especially when we're in kind of the areas of the market that we're currently in, very reactive. If there's a lot of short presence, we can squeeze very aggressively. The markets are so volatile, it really punishes those swing positions, unlike equities, which you tend to have a lot more wiggle room on, and the squeezes aren't half as strong versus some of the volatility that we see, and especially with the liquidity conditions currently as well. So really, the kind of the overall advice here is make sure you take profit. Don't get over greedy with the position. Don't start thinking that it's all going to zero and you've now, made ridiculous money on your position if you just continue holding it. Be sensible. Lock in profit as price moves down, because this market can turn around very quickly. And despite charts and the landscape looking terrible, 2 days we can put in double-digit moves, and then suddenly you're under pressure from the position, wishing you took some off. So it's about invalidation as well, and keeping that in line, like we were talking about in the previous question, and then making sure that you're actually taking profit. All right, let's do another. Good question. I like that. I like that one. Okay, let's find another. How are you planning to place spot on alts going into the next cycle? Wait for the next hot alts? That's a really easy question. Like I covered off earlier, 90% of this watch list is going to be dead. It's going to be, absolutely zero interest in terms of trading. And therefore, or spot ownership, certainly. And therefore, the majority is going to be what comes out. I mean, so for the next bull market, what are the hot alts that everybody's playing? What are the ecosystems that are popping off? What's the latest ecosystem? What's the latest development when it comes to gaming or NFT side of things? What's the next trend? So it's really, for alts, and as you've seen in recent times, and especially if you were here for the bull market, basically what pops off is what everybody latches onto. And the majority of the things that will produce the best returns in the next bull market are going to be things that aren't even on this list yet, right? Things that aren't even created. I think the only thing that I would maybe have a greater consideration for holding is something like Pepe, is something that maybe I would consider as, like, from this list, as moved into a different category in terms of potential spot ownership, because I think that meme coin rallies are always very, very strong, and therefore, looking for entry on something like Pepe is something I would much rather versus like an ADA or AXS at this point in time. Yeah, this is a really good question. And I like this as well because it's forward thinking, which is some positivity in the darkness. Would be interested in your advice for bull markets. What behaviors are we developing now that we need to ditch in order to be successful in a bull market? Yeah, this is a great question, because this is also where a lot of people fail to adapt to a bull market. And then when it gets to like the end of the bull market, it finally clicks on what they should have been doing. And it's usually because of behaviors learned during market conditions that aren't bullish market conditions. So importantly, through regions like this, what we're aware of currently is taking profit regularly. So making sure that you're either playing ranges or you're taking profit at the obvious lower time frame levels or higher time frame levels. And then you've got the anticipation of downside being one of the primary movers, which we've seen. All of the strength kind of in the more recent days has come from being from the downside. And closing positions early, right? Closing positions early in terms of invalidation. Now, they're kind of like generic, because like I'm not going to include things on like buy the dip and various things like that, because that is really bull market stuff that isn't as applicable to the current climate. But I think in terms of what people are picking up now, they're probably the main points. It's like when the bull market rolls around, you want to be taking profit less frequently, basically. So you want to just be able to ride the trend and let it carry you. And of course, there has to come points where you do take money off the table, but you're not in a position where you're looking at like micromanaging every $100 move in BTC. You've got far more room there, and the bull market should just carry you, you know, multiple percentages higher, versus trying to have to micromanage that on a more aggressive basis. So people tend to over trade bull markets when one initial entry will do very well. So it's about making sure that you're not kind of down in the weeds with it, and you are, you know, over managing and micromanaging smaller positions. It's making sure that you are, you know, riding the trend and letting the trend take you to essentially the promised land. And then you've got the other side of things, which is making sure that you are dumbing down basically as much as possible. So right now, this is like a trader's market where the more systematic traders that are able to play both sides of the markets excel. And it is something that is probably irrelevant when it comes to the bull market conditions. The traders that do the best are those that buy a bag of something and hold it until it 5x's. So it's dumbing down as much as possible, however ridiculous that sounds. But, you know, the lower your IQ during bull markets, typically the more successful you will be. And that's something that isn't true as of right now. You know, the dumber you are right now, the more you're getting punished. Whereas that is the opposite in a bull market. So it's just like you buy and then prices go up. And then it's losing what will be, and I guess this is another point, what will be for many people, like this big PTSD cycle that they'll be in right now, where, you know, it feels as though all the time, whenever we pump, whenever we move higher, that we're going to retrace it. And largely we are doing exactly that. So it's justified PTSD. But when we get into bull market conditions, you have to lose that. So you start worrying about every smaller movement when it's just part of a larger uptrending market and far better overall conditions for the market as well. So you have to kind of eliminate that, what's going on now, and it won't affect you as much right now. It will affect you when a bull market begins, because you'll start to doubt everything. You've been conditioned for the last, 18 months that everything is just, every time it goes up, it's a scam and it's going to come back down. And you have to lose that when it comes to, the bull market situation. That's because it will freeze you out of positions. So it will stop you being able to enter positions. And it will also then affect your potential to make money, because you simply won't hold things as long as you need to. Okay, let's see here. Let's do this one. You seem to trade with simplicity, clarity, and confidence, appreciating that this is most likely only possible after a successful track record over a long enough period of time. What advice would you give to someone who is not there yet? I think really, kind of just stripping apart your question and making sure that you're trading in line with that. So I think that the three adjectives that you've used to describe my trading are very important universally to the way that anybody is trading. And if you're not trading along those lines, and this making it sound like, oh, you just need like just trade like me. It's not really about that. It's about making sure that you have simplicity in your approach. So you understand what you're trading, what indicators you use, what markets you primarily trade, how you get your signals, what your signals are, and making sure that you're not one of those people that have 30 indicators on the screen, or that you're always jumping between different indicators. You're always looking for another way of trading, a different approach, and you never really stick to anything. So you want to make sure the charts are as simple as possible, and having some good appreciation for the market conditions as a whole is always very important as well. And then like the clarity comes hand in hand with that. So it's really, a discussion again about what system you're using, how clear is it in terms of providing you with opportunity to take trades. And the confidence aspect is as a result of the first two being correct and in line. So, as long as everything, you have a simple system and it gives you clarity around entry and exit and having a stop loss, then the confidence comes from executing that and hopefully making money on that side. Let's go drink again. Yeah, so that's kind of really it, I guess, on that side of things. But it's a really well phrased question. All right, let's do a couple more, and then we'll. We'll do like a couple of like quick fire ones that I can answer relatively quickly. When you buy options, do you buy in the money, at the money, or out of the money? And what's your rationale? It depends entirely on the trade. I'm happy to buy any of those, but it depends entirely on the trade and how much aggression I see, what momentum signals I see, and basically what the system says in order of, for me to try and get that. The only generic advice that I would give when talking about options is that give yourself enough time. That's one thing that I struggled with early on, was I would be way too aggressive in terms of timeline. Give yourself enough time for your ideas to play out. So make sure that you really give yourself, a good expiry. You don't get too caught up in the what looks like great value shorter dated plays if you have significant targets. So if your strike is, a really good move away and you get really tight with the expiry because you're looking for that premium value, or you're looking to basically degen it, that's going to be an impactor. So always give yourself enough time. The bounce on the 50 level of RSI, what makes you confirm this bounce? Is it the trend intensity, another indicator you're trading hunch, market structure? Examples would be very helpful. I won't do examples because I've done this video for way too long now anyway, but really you're looking for another point of confluence. So let's say, for example, you have a daily RSI 50 bounce. I would love to see a 4-hour bull div on RSI, and I would love to see price tapping into a support level. So what I'm looking for is additional confluence to support a bounce, and like I'd refer to this as like a naked bounce, because I haven't seen any reaction in terms of price, so I can't like confirm the bounce at this point. But what I am seeing are some additional confluence points for a good reason why we might bounce at that point in time. If you're talking about the bounce itself, you just need to simply see price travel in the opposite direction and react to that point. And again, it could feel as though you're late. It feels as though you can't enter now because we've already moved. But again, you have to keep the perspective of the trade in mind. You've still caught, the first day, the first 5-minute candle after the bounce off the 50 level. So you're still technically early, regardless of, the direction. If you feel like you have learned a lot in the recent months and have become a significantly better trader, but the conditions are not favored in your way to be put into practice, momentum trader here, what is the best way to test your ability, if there is a way? I mean, you can always swap markets. Momentum trader's been doing very well in equities. So always, making sure that you are attacking a market that suits your approach. And again, when you've got, raging uptrends in equities, that's a nice market to kind of play around in, and then waiting for crypto to be more aligned with the conditions that you would like to see in terms of taking those trades. And then the other side is just back testing. But if you want to be able to test your ability in a real world scenario, it's probably a case of having to shift markets right now in order to find those that are going to better suit you. And then we'll end on this one. No, we'll do two. From a low time frame perspective, differentiate between consolidation that has a potential to reverse a trend and consolidation that is merely a pause before the trend continuation. So I think the single best way of kind of thinking about this, because you specifically mentioned lower time frame, and let me get the question up so everybody can see what this looks like. Because you've got this lower time frame in here, I'll have to give that from like a slightly broader perspective of what I would do in these conditions. So if I'm looking at something that is a lower time frame consolidation that has the potential to reverse or pause, you'd expect a lower time frame range like this. So I would expect simply support and resistance levels, and therefore my confirmation occurring here or here. And not trying to guess it within the range. Just let the range break and then play it. And if it's a fake out, it's a fake out, whatever. But let the range play out and take the trade based on that. If I were to use higher time frame confluence for what this might be telling me, if we've got a daily RSI that's up here, and we're putting in bear divs on the daily, and we've got a consolidation that looks like this, I would use this higher time frame to be more likely to play into a downside scenario, and may even decide to short tops of ranges to build a position with the thought process that the daily bear div is here and I'm looking for price to eventually break down. So if we're using the lower time frame, I would have to have a higher time frame awareness of what is going on in order to determine which way, if we were locked inside a lower time frame consolidation, which way I think it's going to break. Now, this doesn't have to be a 5-minute chart. This can be a 4-hour chart as well, right? Whatever that looks like. If it's trend continuation, I would expect the opposite. I would expect something like the RSI coming back down here like this and a range like this, and I'd be much more likely to try and take this play and build into this. I hope that makes sense. It's the best way I think I can kind of give that. And then last one, do you trade divergences directly or do you wait for additional confluence? Clean break, reclaim of trend line, SR level, MA, candlestick pattern, etc. For me, the best I can get is a divergence into a key level. Bear div into a higher time frame resistance, bull div into higher time frame support. That's what I'm looking for, those classic double confluence setups. I'd also like two divergences. I'd like the awesome oscillator to diverge and RSI to diverge into a key level, and that pretty much is kind of like the triple confluence package that you would be looking for. Nice and simple. You've got the confluence of your horizontals, you've got your divergences, and then some awareness of the market structure. So being aware, are we uptrending or downtrending? And, like, for example, now on BTC, if we're to retest a higher time frame level and we get a 4-hour bear div that appears and we know we're in a downtrend, that would be something we'd be very, very comfortable in positioning into the short side of. All right, so let's finish up there. This was a nice little way of doing this time tonight instead of the stream, given what the current climate has been. It's allowed me to discuss a bit more freely without interruption from a very noisy chat. And I'll see what the market looks like after Wednesday. We might do a stream on Thursday because, who knows what's going to come out of Tuesday, Wednesday this week. So it might be a good opportunity to dive back into the markets. But I hope this has been enjoyable. Please sub to the YouTube if this is your first time here. It'd be greatly appreciated. I'm trying to build this side of things as well as the Twitter side of things. And I'll catch you guys for another update midweek.